What is up there, guys, and welcome back to the channel as always. Now, in my previous video I went over what is a stock market crash. So today what I'm going to be discussing on is what is a stock market correction. Now these two are almost very similar, but there's a major difference between the two. So again, I'm going to go over what a stock market correction is. So what exactly is a stock market correction? Well, it's basically when the market drops around 10%, if not even a little bit more. So when a correction usually happens is after a long period of time on a bull market. Normally on a chart you can see it just dramatically rising almost non-stop. And while although this may seem good on your portfolio at the moment, it also means that these prices have been driven up to a point that they're overvalued at a certain point. So when this happens after a long period of time with the bull market, a correction is usually necessary because people are just buying certain stocks based off hype or action rather than the company's fundamentals. So for those of you who have been in the stock market for a good while, the latest one has been, I think, around in February, where we had a little correction going on and prices were just going down and down for a while. So at this certain point, when the hype basically starts dying down, smart investors will start selling off their shares when it gets to a certain point. And they sell these shares to take profits. Meanwhile, while others are on the sideline barely catching up, they're going to start trying to buy these shares at a high price. But when these other investors are off selling theirs, you're going to be buying it at a high price, guys. And while these investors are over there selling their shares, it's going to be driving the price back down. And those investors on the other side who barely caught this hype on are the ones who are going to be buying these prices at a high price. And once these prices start to go down again, I mean, it's going to be a little difficult to regain back from these prices, okay? And essentially that's what really happens in a correction. People basically just overprice stocks. So again, a correction is going to be really necessary to balance these stocks back, because when these companies are overpriced, something has to come and just rebalance it, okay guys? These stocks cannot stay up for that long, especially if they're very overvalued. So if these prices are going down, it's going to stop other buyers from wanting to even buy them at those prices themselves, because they just see the stocks going down and down, that they're not going to want to buy them at that time. Now, although a correction may seem like a bad thing, it can actually be a good thing if you're really smart with it. Because see, when these stocks fall down to at least 10 to 20% during a correction, smart investors will normally see this as a sell. Think of it almost as Black Friday. When you see something you've been really wanting for a while, but you've just been waiting for the price to go down, that's basically the same thing with stocks. Maybe you've seen Apple, you've been watching that stock for a while now. Well, if it's been overpriced at a certain point and it starts going down, maybe now it's at a price that you've been wanting to buy it at. So now you can start buying some of these shares. So if it fell down 10 to 20%, you can buy them at these low, cheap prices, because eventually it's going to go back up, guys, okay? If you pick a really good company that you know is going to do good in the long term, then corrections aren't going to affect it over the long run. So while they're at these low prices, this is when you come in and start buying them. Because now when you have bought them at these low prices, eventually within a month or so, they're going to go back up that 10 to 20%. And you're going to gain that profit with it. So this is why some investors, especially myself, love corrections. Because like I mentioned again before, guys, we have this time right now where we can actually start buying these shares that we've been wanting at the moment. So unlike a stock market crash, it's not going to cause no recession or anything. It's just simply a balance of stocks, okay? So when stocks have been driven up just too high, the market's going to eventually correct itself. So causing a correction. So hopefully that helped clear things out a little bit on what a correction is. And if you've been investing in the stock market this year, then you have already noticed the two corrections that have happened recently. So hopefully this helped you guys out there. If it did, please leave a comment down below. Let me know what you guys think. If you like this video, as always, give it a like, guys. And if you haven't already, be sure you subscribe. Again, you don't want to miss any more videos in the future, so be sure to subscribe and also hit that little notification button down there as well. And anyways, guys, I'm going to let you guys go, and I'll see you on the next video.